All right, guys. Whew. All right. Good morning. We're here. Let me know how the music is. The music should be pretty good. Honestly, the markets are down again. Is this crash continuing today? Bitcoin, on the other hand, is up though over the weekend. If you look at it today, it is up to 87,000. Hit 88K this morning in Bitcoin futures. We're gonna do a poll. Does the U.S. enter a recession this year in 2025? Yes or no? Vote on that poll. Let me know what you guys think. In terms of economic data, I think we're honestly pretty slow this week too, but yeah. Next week's packed though. You know, this is a holiday week too. But look at the NASDAQ. NASDAQ all the way down to 18,150s. So honestly, it's not looking good. And honestly, it looks like it's going to test these lows again as well. I'm going to have to start drawing some lines out on this thing. But yeah, let's draw some. I mean, we got some obvious levels to watch for sure. Like this is definitely one right here, 215 or so. I think we got to watch like 250 right here. Maybe lower this a little bit to like this. We got like 4 or 5 confirmations right there at 145 or 150 right there. Could be 150, I guess. Yeah, we're gonna go ahead and make it 150. What else we got? We got this level here. Look at that. Look at the NASDAQ start to test these lows too. I gotta put one up as like the low of the day here, which is right there. All right, so these are the levels we got right here. And honestly, we're looking pretty close to testing these lows right now. The markets are breaking down. Bitcoin's starting to turn as well. One of the reasons the market is down today, we talked about it. There's a couple things, right? Yeah, so basically what's going on right now, we're in a general pause. Okay. What's going on right now, though, is that China responded this morning with a statement today. They said they warned other countries against striking trade deals with the U.S. that harm China's interests. Beijing vowed to take reciprocal countermeasures if such deals occur. This follows reports that the current administration might pressure countries seeking tariff relief to curb their trade with China as part of the negotiations. Yesterday on Sunday, all right, look at the NASDAQ breaking down here, guys. Wow. NASDAQ just cracked lows of the day. We did have Netflix earnings yesterday or Thursday, but we just broke lows of the day, guys. Wow. I mean, I kind of want to short this, right? I think I'm gonna take one micro contract. I know it's early. I know it is, but we had such a big downwick. All right, I'm gonna go ahead and just get out here. Very small little baby trade. I don't really need to hold it. I think we're just getting in a little small trade. It's too early for me to have any significant edge, but we're green on that one. We made money. We'll go back to full screen here. Obviously, most things are down. Yeah, I'm looking at SPY news to see if we got anything else going on right now. But again, what I see going on is Powell's threatened to, yeah, hold on. Next week we got all kind of stuff too. Jim Cramer posted this morning as well. Look at this breakdown. Netflix, yeah. I mean, Netflix is up on good earnings. They were over 1,000, but now they're back down. Yeah, I mean, Nvidia down under $100. Apple's down to 192s. Look at this low break again here. Wow. Now watch, I think there's a big level here. It's 18,000. 18K is the level right there, I think, too. Yeah, but the market's open today. The futures market's definitely open, yeah. Futures market's definitely open. I mean, a lot of markets are still closed though, because some places have Easter today. Just to clarify, depending on where they are. Yeah, I'm looking at other stuff going on today. So again, this is what I've gathered this morning for news. Okay, so China issued a strong statement today warning other countries against striking deals with the United States, that harm their interests. Beijing vowed to take reciprocal countermeasures if such deals occur. This follows reports that the current administration here in the U.S. might pressure countries seeking tariff relief to curb their trade with China as part of the negotiations. That's ultimately what's, really deeply negatively impacting markets this morning, I think. The president yesterday issued an 8-point list on Sunday warning trading partners about non-tariff barriers like subsidies, intellectual property theft, currency manipulation, restrictive standards that could negatively impact relations with the U.S. even during this current tariff negotiation period. And so this caused uncertainties around tariffs on electronics like smartphones, laptops, Nvidia down, Apple down, electronic companies down. U.S. Customs and Border Protection issued guidance excluding them from the reciprocal tariffs last week. Administration officials like the Commerce Secretary Lutnick indicated that there might be temporary possible preceding news sector specific tariffs or tariffs resulting from ongoing national security investigations into semiconductors and downstream products. The president also stated that these goods fall into a, quote, different bucket, he said, and remain subject to other levies. DHL and international logistics companies said that they would temporarily stop handling shipments valued over $800 from businesses to the U.S. customers, or, effectively today. While the exact reason wasn't specified, it could be related to increased complexity or scrutiny in processing under the new tariff environment. And that's, again, what's dragging everything down. That's why the markets are down today. All this stuff. All right, guys. So we're gonna do a post. This is we posted the 4 reasons the market is opening red this morning. Bank of Japan is said to see little need to change basic rate hike stance too, so that just dropped too. So the Bank of Japan's looking like they're going to still be hawkish. They said they are to mull cutting price forecast and outlook report. So Bank of Japan just posted something. Yeah. Is Meta under 4s? Yeah, Meta's at 493s. Ten-year yield moving up. Is it really? Let's look. Yeah. I mean, I haven't seen it opened yet. What is it at right now? All right, so the 10-year yield's currently sitting at 4.38%. Yeah, so it did open higher. It's right here, though. I mean, it's basically where it was Thursday, though. It's at 4.38% as of 7:30 this morning. So almost 4.38. Almost 4.39%. It could be rounded to 4.39, but it's still like it's slightly higher, but not too much versus where it was Thursday. Also, the president criticized Jerome Powell this morning is another reason the market might be down. You know, so Friday the president said another thing about Powell, got onto him for not lowering interest rates. He vocalized his discontent with the Fed leadership during a question and answer session with reporters. He said, quote, "If we had a Fed chairman that understood what we were doing, interest rates would be coming down too. He should bring them interest rates down." And now let's take a look. What is the likelihood that they're going to cut rates? You know, the rate cuts are coming in a couple weeks. Or maybe not rate cuts. The rate decisions coming in a couple weeks. And it's still pretty probable that we're going to pause rates, that we're not going to move them here. You know, honestly, you look at the 10-year Treasury, it's going up. So here is the rate cut odds here. You can see it's only about a 12% chance that we cut rates in May. And so I think that's interesting too. Like only about a 12% chance of a rate cut in May. I did a question here. Does the U.S. enter a recession this year? 70% of people say yes. Do you guys think the Fed should cut rates? They haven't even started printing yet. Gold is going to AK once they do that. Yeah, I mean, I don't think they're going to print anything. Like, they're not, I mean, listen, they're not going to do QE, if that's what you're talking about, right? Like, quantitative easing, like, we don't have anywhere close to the weak economic reports needed to do QE. Like, we got tariff news, sure. GDP hasn't come in negative yet. We don't have really weak job numbers. We don't really have weak payroll numbers yet. Unemployment's still pretty low on average. And so, and I'm not saying it's going to continue to be that. Like, I think that we just haven't seen those reports yet. And I think those reports might be coming here. But I don't know if they're going to do QE now. They might. I don't know. But I personally, I don't think they will right now. I think they would rather cut rates before that. You know, like before they do QE, which is a more desperate decision, they're going to just cut rates, right? Like we're just going to see rate cuts first. And we're not even seeing rate cuts yet. And that's one of the reasons the president's mad at Powell. But at the same time, Powell's worried about inflation. And so Powell doesn't want lower rates to spike inflation, which is something that we've already had to deal with over the last 5 years, is high inflation. And so it's a tricky environment, I guess is the point. Do I think we should get rid of Powell? Personally, no. But there also might be some bias on my end because, you know, my biggest streams are Powell streams. And I'm sure, like, even if we got a new Fed chairman, I'd still get good views covering his stuff too, just like, you know, because he's going to talk about the economy and influence markets. But I'd rather just keep it, But at the same time, I don't think we're going to do QE anytime soon. Like, QE is a much more desperate measure. And, I just don't think the Fed's going to do that right now. Now, we get negative GDP, we get high unemployment, we get weak payrolls. Then I think it's looking a little bit more likely in terms, like if we're heading towards a recession, and that's very obvious, then I think the Fed might pivot to a cut, and they might do QE on top of that cut. But I don't think they're just going to randomly do QE without cutting rates first. So I've already got into some trades. I'm already green. A rate cut is QE. Quantitative easing is a form of money printing in which banks create online bank reserves. And then they use bank reserves to buy up a bunch of bonds, mostly, and MBSs. And this injects liquidity into those markets in a time when we have economic uncertainty. They did this in 2020. They did the opposite of it following 2020 when inflation spiked out of control, partly because of QE. Now, lowering rates might be seen as economic stimulus, but there's a difference between QE, which is a very specific thing by the Federal Reserve, and just rate cuts. Rate cuts are just lowering interest rates by the Fed. They're just bringing interest rates down to try to stimulate the economy. QE is a very specific thing. It's a more desperate thing. So just to clarify for that, we can look it up if you want. What is QE? Is a type of monetary policy used by central banks to stimulate economic growth when interest rates are ready. It involves central bank purchasing long-term government bonds or other assets, injecting liquidity into the financial system and lowering long-term interest rates. So, yeah. Fed Tools still has the first rate cut for June. Yeah, I'm looking at it now. It does have the first rate cut, and this has moved up. Just to clarify, this was July. So this was July. Now it's 60% likelihood. So now it's looking like they're not going to cut rates this next meeting, May 9th or whatever it is. They're instead going to cut rates June 18th. So yeah, they're not going to cut rates May 9th. They're only going to cut rates June 18th is what they're looking at now. But who knows? They might change this too. This is subject to change for sure. NASDAQ's been breaking down, testing lows here if we look at it. What do you think of Bitcoin's price right now? Yeah, Bitcoin is up a lot too, which is very interesting. Also, guys, if you haven't already, we're going to be day trading on Top Step's funded account program today. So Top Step gives you a 50K demo. They test your skill with it. You pass the test. They fund you. And then you can get a 90% split after that as long as you follow their rules. So if you get funded and then you build up like 20K, you get to keep 18 of that, which is 20%. Or I'm sorry, which is 90%. They get to keep 2 of that since they fund you the money, which I think is reasonable. And you get to, before any of that, you get to keep your first 10K in profit after you're funded. And so very similar to funding your own account in terms of reward. It's basically 90%. There's only a 10% difference between funding your own account and using this. But if you fail this challenge, the base one's $50 a month, basically $50 a month. It's not the end of the world. It just makes sense to learn this way versus funding your own account thousands and thousands of dollars, trying to look cool in the market. When most day traders lose their first few years, you can pay your market tuition a different way and learn. And if you fail, it's $50. It's not the end of the world. I think that's a powerful thing. Most day traders end up losing when they first get started. And I think this is a really great way to do it. In the futures market, there's no PDT rule. I'm trading a Top Step funded account, and we're green. And we've had like 11 green days in a row or something crazy. Let me see what we're at right now in terms of how many green days we've had in a row. Yep. Yeah. So we have had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 green days in a row on this account. So it feels good, man. And again, if you want to check it out, futures market, there's no PDT rule. I'll put the link up. I'm just doing this. I'm doing a plug a little bit early than I normally do, so I can pin it to the top of the chat if you want to check it out. There's the link. Yeah, I mean, Tesla's falling. It's falling. Yeah, Tesla's down. But I mean, the whole market's down. Like, you got to understand, this market, in my opinion, we're going to end sometime soon. Like, in my opinion, I don't know if the trade war is going to end, but in my opinion, all this stuff is, like, we're going to eventually get a deal done. Who knows where we're going to be when we do? But in my opinion, we're eventually going to get a deal done. We're not just going to battle forever. And I think we're eventually going to get a deal done. I think when we do, the market's going to bounce back. But at the same time, guys, remember, I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I say. Do not copy me. I'm not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly, guys. As it says, I shouldn't even have to do this plug or this disclaimer, because if you read at the bottom of the screen in big yellow letters, we're not liable for losses. Understand CFTC 4.41. You know, not investment professional. I don't know. Do y'all think Tesla will bounce back? Like, that's my question. Do you think Tesla bounces back here, or what do you guys think happens? If so, when? When do you guys think it bounces back? All right, guys. $30 minutes after the open. No, bro, too much competition. You know what I'm seeing a lot? I'm seeing a lot of Rivians driving out there. Like, I saw a lot of Rivians. Like, I went to Baton Rouge over the weekend, and I saw some Rivians in Baton Rouge, you know. And I thought maybe I just was seeing Rivians because my area has got a bunch of Rivians here in the U.S. and Texas. But there's a bunch of Rivians in Baton Rouge, surprisingly enough. So Rivian is getting pretty big. Let me see where Rivian price is at. I mean, Rivian's still $11 a share, though. Yeah, we got Tesla earnings tomorrow, too, which are obviously freaking monstrous for Tesla earnings. So Tesla earnings tomorrow, huge, monstrous, big. We'll see what happens. All right, so Nvidia shares fall -3% as Huawei prepares mass shipments, or Yeah, as Hawaii prepares massive shipments of its advanced 910C AI chips for Chinese customers as early as next month. So this is NVIDIA. This is NVIDIA related. Okay, so again, one of the reasons market's down is also NVIDIA dropping. I'll put this news. Oh, Rob, you never got back to me, so again, so this is, so yeah, Rob, regarding the QE conversation, right? The thing you got to understand is this. It's that the Fed injecting liquidity into the bond market can help lower interest rates, right? But QE is not, like, QE is not lowering interest rates. QE is helping to lower interest rates, if that makes sense, right? QE is a more desperate thing. It's a very specific thing. Hey, what's up, Pawn? Okay, yeah, all good. Yeah, I'm kind of like an economics nerd. That's why. That's the only reason I can joke around and talk about this stuff. I'm kind of an economics nerd. Sorry, bro. Bro, I'll tell you this, dude. This is all I'm going to say. Okay? Baton Rouge drivers, terrible. Terrible. Like, just horrible drivers in Baton Rouge. You know? Like, just the worst drivers. And you want to know the worst drivers in the world? BMW drivers. They're not only bad drivers, like bad functional drivers, but they're rude, they're mean. BMW drivers are just terrible, horrible people. Terrible drivers, rude. Back off the mic, bro. Last week they said that my mic was not loud enough. Okay. Look, I'll lower it a little bit just because I'm trying to find a good middle zone here. Let me know if this is good. But last week they yelled at me because the mic was too low. Thanks. I'm a BMW driver. Listen, I'm not targeting just you. I'm just saying. I don't even think it's because they can't drive well. I think it's because they're inconsiderate and rude and cause problems. You know, they don't let you over. Like, you know the people where there's plenty of space to let you over, but they zoom up and block you from getting over just because they you know, they turn everything into a conflict and they're childish and, you know, they're childlike in their behavior. That's what I'm talking about. Like, bro, if somebody wants to get over, they're going faster than me. Let them get over. I'm not going to get mad at them. If they start going slower, I'll just go around them. I know. Listen, I get it. All my BMW drivers are like, yeah, I do that. I know y'all do. Why? Like, what's the point of doing that? You know, I finally have like a place to take all the frustration out on. Yeah, it's all good. Listen, I like you guys anyway. BMW drivers, listen, I'm here for you. I get it. I like them. You know, I understand. Hey, what's up, Airborne? Thank you, bro. Appreciate it. Thanks so much for the $5 donation, brother. Appreciate the love. Thanks so much. All right, guys. Hey. The trolls are showing up. We got to change the conversation. Anyways, I think a big level here is 18,000. 18,000. We're right at 17,999 here. I got a level drawing. It's basically 18K. 18K, big psychological level. I think if we break under 18,000 today, if we break under 18K today, that's going to cause some panic in markets. Under 18K, I think that's going to cause some panic. Amazon, where's Amazon at? Amazon's down too. It's down to 169s. BMW, hot button topic. It's probably just one of those trolls that tries to take everything and twist it, and so you just kind of ignore them. You got a stonewall, and that's what it is. But yeah, market's down. I think the opening bell today is going to be incredibly interesting. Again, China came back with some news this morning. They basically said that they're going to protect their interests. And yeah. Essentially what they said, just to go back into it, is that they warned other countries against doing deals with the U.S. that harm their interests. They vowed to take reciprocal countermeasures if such deals occur. And again, this follows reports that the current president might pressure countries seeking tariff relief to curb their trade with them as part of the negotiations. And obviously, they did not like that. The president also issued an 8-point list on yesterday, warning trading partners about non-tariff barriers like subsidies, intellectual property theft, currency stuff, restrictive standards that could lead negatively to impact relations with the U.S. even during the trade negotiation period. And so it's looking more pessimistic in a lot of different ways. You know, we also had DHL. Again, DHL announced it would temporarily stop handling shipments valued over $800 from businesses to U.S. customers, effective today. While the exact reason wasn't specified, it could be related to increased complexity or scrutiny in customs processing under the new tariff environment. And then we also had kind of a the current president also does not like Jerome Powell, wants him to cut interest rates, and came out kind of critical of him last week on Friday. So that's all what's going on today. That's the market right now. And NASDAQ obviously has been breaking lows, looking weak. Apple's down, Nvidia's down. Nvidia also down big after a report regarding Nvidia here. What was the report for Nvidia? It was like, I think China is going to be shipping out one of their good high-powered chips. Yeah, Huawei prepares mass shipments of its advanced 910C AI chips for Chinese customers as early as next month. This follows the U.S. restricted exports of NVIDIA H2O chip news last week. So they're looking to jump in and take NVIDIA's market share over there, and that's obviously bad for NVIDIA. NVIDIA down here, if we take a look at it. NVIDIA under $100. They're down to $98, 97 something a share here. So NVIDIA's down for sure today. Yeah, Treasury yields are going up today. They increased overnight. They haven't opened up on TOS to show you guys, but they did go up overnight. I think they were like, what? They were like 4.39% or something like that. Yeah, I mean, NVIDIA's right here. Oh, no, that's Apple. NVIDIA's at the top chart. NVIDIA's up here. Look, it's down. It's at 97.90s. Really weak. Looking bad. Is the 10-year at 4.4%? I think it's just under 4.4, right? It's like 4.38, 4.39. No? It hasn't opened up on this end yet. I looked it up this morning. Yeah, the 10-year Treasury yield is currently... Oh, it is. Honestly, it just went up. I'm sorry. So, yeah, you are correct. It's currently at 4.41%. Yep, you're right. 10-year Treasury yield. It went up since the last time I looked at it. I looked at it earlier this morning. Again, it's now at 4.41% for 10-year Treasuries. So, Treasury yields popping up still. Yeah, Bitcoin up overnight, which is interesting. Yeah, I don't know why Bitcoin's up, but it is. Bitcoin up overnight. Bitcoin having a relief bounce. So Bitcoin is up. There's a couple different reasons. Weakening of the US dollar and Fed independence concerns. And so the main catalyst for Bitcoin's rise seems to be US dollars weakened significantly, hitting multi-year lows. It's attributed to market anxiety following the president's considered removal of the Fed Chairman Powell, and fears about political interference undermining the Fed's independence or driving investors away from the US dollar is what this is. The Dixie is down to 98 if we take a look at it. Here's the Dixie. It's at 998.14. So, and it hit 97s earlier, which is the lows. Yeah. The lows since March of 2022, or yeah, March of 2022 lows. So the dollar index is breaking down. As the dollar weakens, concerns about financial stability rise. Gold breaking all-time highs at 3,400s this morning again. So gold breaking all-time highs. Dollar index is down. Gold is ripping up. $3,400 an ounce plus currently for gold. If you take a look at gold up here, here's gold. Again, $3,400 an ounce for it. And again, I should have bought gold. Honestly, gold's one of those gold's one of those assets that I have some FOMO over. I'm not really mad about my risk. Like, I understand gold is up a lot, and that eventually it's going to start turning down, and I don't really want to get stuck in a long-term downtrend. I'd rather accumulate it on dips. But you know, sometimes what happens in markets when you have that thesis like I have is that you're going to miss out on some runs, and it looks like that's what's going on for me. So yeah, I was wrong about gold short term at the very least. It's been ripping up. Yeah, gold surged. Bitcoin rallied despite US stock futures falling. Potential shift in where Bitcoin is acting more like a safe haven asset similar to gold rather than moving in tandem with riskier assets like tech stocks and markets. It also had a technical breakout over 86 and 87,000. On-chain data suggests that large Bitcoin holders have continued to accumulate coins and thin liquidity. So, interesting. Yeah, gold just keeps pumping higher, you know. But eventually it'll turn down. I'll buy some more, you know. We'll be all right. Yeah, I mean, it's not the lowest it's ever been. It's the lowest as the Dixie's been since 2022. And I remember 2022. 2022 was a period of like really high inflation. The Dixie was ripping up. And so the Dixie got above where it's at now because of 2022 period of high inflation. Now we're starting to come back down some. That's essentially what's going on. I really wish I could click something and have it not like glitch out the charts, but it's all right. Gold still pushing up. Nvidia bouncing back a little bit here. We'll see what the market does. Again, the 10-year note yield surges back over 4.4%. Hopefully you guys had some. I ate some crawfish this weekend, man. I did eat some crawfish. Uncle Dan has got the greatest crawfish of all time. It's good crawfish, honestly. That's my only crawfish I've had this season. They were very good. They were good. Yeah, if they actually have gold chains. Gold chains are actually not bad. All right, like, okay. Here's the mistake most, like, rappers make, okay? The mistake that they make is that they buy diamonds, all right? Diamonds are crap. I don't like diamonds at all. I don't like investing in diamonds. I don't think the market is very smart to put money in. It's artificially propped up. Like, the diamond industry, especially with, like, all the fake, all the lab-grown diamonds and stuff like that, just not a good investment market. Now, if you're really smart, you buy a big old gold chain. And that thing will probably, as long as you don't get ripped off in the purchase of it and you buy it for like slightly above what the net cost of the gold would be, you're still probably going to make money holding that thing for a decade or more. And so those are smart investments. Think LL Cool J, right? That's where the smart money is. LL Cool J type chains. Am I too old? Who's the new rapper? What was his name? Where he's like, gold up all of my, whatever. Think about him. He's probably making some money on gold. But if you buy diamonds, trying to look cool, that's where the bad market is. Buying diamonds. Diamonds are just not where it's at. They don't sustain price. They're just not as good as investments. Slash GC is gold futures per ounce, right? Gold is currently over $3,400 an ounce. It's slash GC. Yeah, I mean, factory Rolexes with diamonds, that's different, right? That's a different thing. But most of the time, they're not factory, right? But factory Rolex diamonds are just rare because most of the time, Rolex doesn't do, like, super flashy diamond Rolexes, right? So if you got one, that's super rare. Those can appreciate wildly in value. Ice Cube, yeah. I mean, I don't remember what Ice Cube wore, but yeah, I guess. Just gold. If it's pure gold, good. Diamonds, bad. Diamonds, not going to retain value. Gold probably will retain value if it's legit. Yeah, rest in peace. Yeah. Oh, diamonds market was always kind of shady, in my opinion. Like, Carol never really was into diamonds either. Like, we got our diamond wedding band and stuff like that, but, like, she was never into diamonds like that. All right, so MicroStrategy purchased another 6,556 Bitcoins between April 14th and April 20th at an average price of Bitcoin of 84.78. So this is some news that just came out. Again, MicroStrategy bought another 65 plus 100 Bitcoins. So MicroStrategy bought over 6,500 Bitcoins over the last week, basically at an average price of 84, just under 85,000. They bought it. Yeah, Tesla earnings tomorrow. Yeah, that's right, Jabba. That's who it is. I mean, D-Man, I'm not going to talk too much about what I own. Like, I try not to, like, look, I got enough haters here. I don't really want to cause more people to be, like, weird. You know what I mean? Like, people get really jealous and insecure. And, like, I'd rather, like, I try to talk about stuff in a business perspective. But in terms of just talking about what kind of assets I have on a deeper perspective of, like, money, I'd rather not. It's just not something that, like, I don't think it's gonna do it. Like the net effect of that, I want it to be a positive. So, like, I could talk about rental properties, I could talk about watches, because watches can be like many forms of investments depending on if you do it right. We could talk about gold, we could talk about all this other stuff. But in terms of like anything else that I own, or like what kind of cars I drive, or, you know, I just rather not talk too much about it. People get weird, you know. Yeah, Tesla earnings tomorrow will be very interesting. And Tesla, let's take a look at what Tesla's expecting here. So I'm curious to see what Tesla's expecting. So Tesla drops earnings tomorrow. They're expecting 35 cents a share. Honestly, and I still think even at this price, the PE ratio is not good for Tesla. All right, let's take a look. I'm gonna calculate. All right, so I'm asking AI what Tesla's PE ratio is. Because PE ratio, I think, matters a lot with Tesla's free fall. I think NVIDIA actually has a good PE ratio right now if we look at it. I'll have to go take a look at what it is. Yeah, so MicroStrategy, again, bought over 6,500. Alright, so the PE ratio for Tesla is in the range of 117 to 118. It's still very, very high PE ratio. As of April 17th, Morningstar reported a normalized price ratio of 93.73. It's still very high. Still very high. Like, Tesla's PE ratio is still over 100. Yeah, NVIDIA's got a 35 PE ratio. That's pretty good, honestly. Like, it's not great, but like a good PE ratio is like under 25, like under 30 is probably good enough. At least it's reasonable, you know. Depends on his mood any particular day, I guess. I mean, sometimes I might be in a more sharing mood, but either way, I'm not really going to be telling people too much regardless of my mood, I think. Like, I've said this once, I'll say it again. If I really wanted to, I could use my house and my cars as like marketing material to try to like look cool on the internet. I'd rather not. You know, I don't really need to. Yeah, I mean, forward PE is a little bit more interesting, but I think with Tesla, they're expecting 35 cents a share tomorrow, which is pretty light earnings-wise for Tesla. Revenue is expected. Let me see what they're... All right, let's take a look at Tesla here in terms of EPS graph and revenue graph for Tesla. Alright, so here's Tesla's EPS. 66, 62. So, I mean, if they do show up at 35, it'll be their lowest quarterly EPS in a year. Revenue's kind of probably a more, let's take a look. Revenue's probably a little bit more important of a metric. Their last one was 25.7 billion. And so they are expecting a decrease in revenue. Some of it might be seasonality. Yeah, they're expecting 21.85. And if you take a look at their revenue, on the other hand, like here's revenue for them. Yeah, I mean, their March quarter is typically their worst. So maybe that's what it is. But, and I think if we take a look at EPS, like here's their last March quarter. So their March quarter is typically their worst. Or their quarter ending March 31st is typically their worst. And that's what drops tomorrow as well. So, we'll see what happens. We'll see what happens. Yeah, I like cars. Nvidia forward PE is only 22. Is it really that low? That's pretty good. Yeah, I mean, I'm on the internet, so like people people tend to think I'm bragging, or they think I'm doing all this other stuff. Like, I'm really not. I'm just trying to have conversations with people. I mean, I brag sometimes. Everybody brags sometimes, especially if you put yourself out there on the internet and we start talking about stuff. But I try to keep it light. I don't really want to, you know. I mean, I got some cool cars, but I don't have a Lambo or anything like that. I don't really need one. Maybe if I found a way to write it off, but I have to get a Urus, and I don't really like Uruses. Like, if I'm gonna spend $250K on something, it ain't gonna be a SUV, you know. Like, I don't need a like. I was explaining this to my wife, right? Like an SUV with a big, like, okay, and this is what my wife and I were talking about, getting an SUV that has like a souped up, like, fast motor in it. It wasn't the Urus, but it was something else. It was like an SUV with like a souped up fast motor in it. And I told her, I was like, look, that doesn't make any sense to me. Like, we're in an SUV, they're top heavy, you know, they don't handle as good as like cars. And so putting like a really souped up motor in an SUV that's top heavy seems to just be a liability for me. Like, I don't see the point in it. Like, SUVs are luxury, not speed. If you want to go fast, like, buy a car to justify it. But, you know, I don't see the point in putting like some super fast motor in an SUV that's top heavy. It just seems kind of dumb. I don't like the Uruses. Yeah, y'all check out our Discord. Completely free, doesn't cost anything. Pawn just posted the link. Sorry, Pawn. I haven't even opened the Discord yet, bro. Sorry, dude. There we go. Let me check it out. Yeah, so Tesla had some news stories that came out. They said, we recently published a list of top 10 AI stocks in the spotlight. Taking a look at Tesla. Stands against other top 10 AI stocks. I mean, Tesla's up there, though. Like, what about Ford? How's Ford doing? Honestly, Ford just doesn't go anywhere long term. Like, that's the problem with Ford. It's hard for me to put money into Ford. Like, look, Ford hasn't gone anywhere in years. The last time Ford went up was starting in 2020 and up to 2022. And since 2022, it's basically stagnated in a period of time in which the market has flown up. What is this, guys? This must be some random order that got filled, yeah, for NVIDIA. NVIDIA's still at 98s. But it's just hard for me to stick money at Ford. Like, Ford just doesn't. I'm just not interested in it that way. Oh, Sam wants me to read his poem. Where's your poem, bro? I don't see the poem anywhere, bro. I'm looking for this poem. Oh. I mean, it's a good poem, Sam. Y'all join the Discord if you want to check it out, though. How you feel about Target? Overall down a good amount. Yeah, I mean, Target's one of those stocks that, like, I'll probably just add to it over time. I'm in a very small position of Target. Or actually, I don't even know. I sold some of my positions just to be out there. Like, I am in a couple shares of everything, but it's a very small position. I'll probably just add on the downside. I think I had some Target, but I ended up unloading it. And I'm just kind of sitting in it. Sitting pretty flat right now, waiting. Again, I never really... Yeah, I did see that. Rest in peace, Joseph. You know. But I think long-term is going to be fine, though. A wagon? You mean like a hatchback? I don't like hatchbacks either. Yeah, I don't like hatchbacks either, personally. I'm just not a big fan. Like, look, if I'm going to drive a sports car, I'm going to drive a sports car. If I'm going to spend $250,000 on something fast, like, it better be a car. You know, I don't want a freaking SUV. Top heavy. You know, can't really handle well. I don't want a freaking hatchback. It just depends, though. Like, if I'm going to spend money on something, like, I want to... Like, I was telling my wife this. My wife is like, ooh, you know, certain cars are too flashy. I'm like, look, if I'm going to spend money on it, like, there's sleeper cars that I could buy for very cheap that would beat all the other cars, right? And that's an option, too. But, I don't know. Yeah, Rivians are cool too. I saw some of those. All right, guys. So we got these levels here. I'm looking at this level up at the top. We got the 200 exponential moving average as well here. So we got time, but... See if the red continues today. The market red. Yeah, no, Nvidia's down. We already covered that news, David. So Nvidia's down because they're shipping out. The chips were. Let me find it. I saw it earlier. So yeah, Nvidia is down because of Huawei prepares massive shipments of the 910C AI chips for Chinese customers as early as potentially next month. And this is after the U.S. restricted exports of Nvidia's H2O chip to them, right? So it's looking like they're going to try to replace it with one of their chips, which is probably the smart move for them. Like, that makes sense. I can't really knock them for it. But it's obviously bad for Nvidia because it's going to mean less reliance on Nvidia. So that's basically what's going on. Yeah, we do have Tesla earnings tomorrow. We got Google earnings Thursday, which is pretty big reports here. In terms of economic reports this week, though, I think we're actually pretty boring. This week's slow. Next week's busy. Very busy. We got some Fed speakers tomorrow, too, that might influence things. We got the U.S. leading index at 10 a.m. That might move something, but a lot of countries are still closed today. We got building permits, services, manufacturing, PMI. And then Thursday, we got jobless claims, durable goods, existing home sales. Friday, we got Michigan inflation expectations. That's kind of big. Let's see what that looks like. But yeah, markets definitely red today. The Nasdaq's pretty. I kind of want to short to see if we move back down to retest, but I also think like we could come back down here. But we have a combine account we could play on. The problem is like, yeah. All right. Do I want to short this? I might want to here. Let's try. I'll short one contract here, just one. I just want to see if we range back down. Here we go. Yep. Well, that's nice. There we go. I'm going to go ahead and just cut it right there. I mean, very quick little trade. I didn't have to hold it very long to get some red action here. Just kind of a range-bound trade. Very small, but green nonetheless. Look at, we ripped right back up too, so I gotta, you guys wake up so early. I mean, let's see if we can exit out of some stuff. I got too many windows up. The 10-year Treasury bond honestly back down under 4.4% as of now. Did the 10-year wake up yet? Let me see. Yeah, so look at the 10-year spike up here this morning. Just under 4.4%, still up a lot. Yeah, so Ford apparently pays a dividend. I missed out on that. I feel like I've heard that before. How much of a divvy? Ford pays 15 cents a quarter. I mean, it's still a 6.23% divvy. Yeah, I mean, it's not a bad divvy for Ford. Consider you could buy up 100 shares pretty easy, 200 shares. Past few weeks, a red Monday and a green weekly candle, maybe. Yeah, the news about Powell and the president are kind of going down too. It's still a pretty slow day for economic reports. Like this week's slow, next week's slow, but we do have some earnings too. So we got Tesla earnings, we got Google earnings. Yeah, I see Ford. I see like AMD down too. Apple's down to 192. So I think Apple's really negatively affecting things. Here's Nvidia. Nvidia's trying to come back. I think $100 on Nvidia makes sense. I'm trying to see if we got another level that we can draw in this one too. I would say maybe like 115 here. Even if we get over this, it doesn't mean it doesn't. This 115 level isn't solid. Yeah, so next week we honestly got a lot of stuff. This week's pretty slow again, but it's earnings week. So next week here, chat. This week we got durable goods on Thursday, consumer sentiment Friday, services and manufacturing PMI on Wednesday. Bostic speaking on Wednesday too. We got some other Fed speakers. Oh no, let me change the song. But next week we have a lot of stuff. So next week we got JOLTS Tuesday. GDP, non-farm employment, PCE data, Wednesday. Thursday, we got jobless claims, ISM manufacturing, PMI at 10, construction spending, and more. Friday, we have non-farm payrolls and unemployment. So they, for whatever reason, they've consolidated every major economic report for the month at the last week of the month. So we got non-farm payrolls, unemployment, all kind of stuff. So, yeah. But again, Wednesday, April 30th, we've got PCE data, which is inflation. We got GDP and ADP non-farm employment. So they've compacted all the stuff basically, which is a little bit different. Usually they spread it out some more. Yeah, usually they spread it out more, but, you know. Yeah, so again, MicroStrategy acquired, according to Michael Saylor, 6,556 Bitcoin at an average price of $84,785 per coin. Hey, what's up, yo? Appreciate it, brother. Can 518 be broken on the SPY today? SPY 518. I mean, it could. Yeah, I mean, that could definitely get broken today. It doesn't mean it will, but it could. I mean, it could, like, okay, look. So here's 518 right here. It's not like that's like super far-fetched price away from us. Right, here's 518. Like, that could obviously get broken today. I mean, it doesn't mean it will. Maybe it holds over it. We don't really know what the future holds here. But the NASDAQ is down, and we're not really that far away from it. We also have 18,000 on the NASDAQ. So, yeah. GDP will be positive? Maybe. I don't think so, Trax. I appreciate the donation, but I don't think that has nothing to do with the markets going down. Markets are going down because of a lot of overnight catalysts that happen, specifically trade, tariff-related stuff. We had, like, trade, tariff-related stuff. We had chip-related news that was bad for NVIDIA, and NVIDIA's under $100. Like, we got, yeah. So that's basically what's going on. So, yeah, that doesn't really have much to do with it. Although I appreciate the donation, but yeah. I bet I could buy a lot of cheaper, maybe. Do you guys think GDP for Q1 will be negative or positive? This is a really interesting question, I think. Will GDP be negative or positive for the current quarter? Negative or positive GDP for the current quarter? I really don't know. I'm curious. What do you guys think? Positive? Maybe. I hope so. We'll see. Yeah, remember, we got Tesla earnings tomorrow. So Tesla earnings tomorrow evening. Big. Not small. Maybe, but I think it'll be low, but I don't think it's going to be negative too. But who knows, man. I think it'll be low, but I don't think it's going to be super deep negative. I think if it was, the Fed would already be pivoting to rate cuts. Yeah. Yeah, for sure, Femi. I agree. Yeah, I mean, technically that's true, Sam. But that doesn't mean that's going to be how it goes. Like, if he really wants him out of there, he can do it, I think. He's not supposed to be able to, but he can if he really wants him out of there. But I don't know if that's what's going to happen. I think he's trying to send a sign to Powell to cut rates, and I think Powell was fearing inflation, is what I think it is. I think Powell fears inflation. He doesn't want inflation to get worse. So we're kind of stuck between the president, who fears a weak economy, and Powell, who fears high inflation. And again, I kind of, obviously everybody should fear both. Inflation's not good because it renders a lot of your money more obsolete. Not obsolete, but it renders it more useless. Everybody should fear economic weakness, of course, because it might be hard to find a job, hold a job, spending might be low, you might lose stuff. So, I mean, we should fear both. I tend to fear inflation more, too, because of the 5 years of crazy high inflation that we've seen. And so I think we're somewhere in the middle, but I think it's a scary market for both, to be honest, right now. All right, guys, SPY up to 521s. So SPY's honestly bouncing back. We got the NASDAQ starting to bounce back, too, here. Now, we got into one green trade. Very small. Let's watch this 115 level that we have as a support or resistance level on the chart and see if that level holds. Doesn't mean it will. Can't guarantee anything. You guys know me, not an investment professional. Turn this yellow thing out the way. Inflation is worse for... Yeah, I mean, inflation should be... I fear inflation a lot. Inflation is certainly something in which I'm not really... Like, I fear inflation a lot. And so I'm not really trying to have inflation go up much more without hedging against it in some ways. Yeah, and I got to talk to a lot of people about, like, the market being down, you know, like my mother-in-law, stepmom kind of thing. I don't know what she said she's down like 20-something%. And what I told her is true. I was like, look, if you wait long enough, market's going to come back eventually. Right now, who knows how long that's going to take, but the market's going to come back eventually. And she was like, yeah, but I was going to retire within 5 years. And then I told her that's a much slipperier situation. I told her she could sell her stocks, buy bonds for the next 4 years, earn what, 20% back. You'll be right back to where you were, you know, guaranteed. The big risk there is that if the market does rebound in the next 5 years, you're going to miss out on whatever gains those were. But I think that's a much more risk-averse situation and plan. But she didn't like bonds as much, so I don't know. That's what I told her. I told her I don't freaking know what's going to happen, but you just got to be careful. All right, so we went up to this level here. I'm going to adjust it down slightly since we confirmed it. Yeah, there we go. We are already in a recession. So, Jay Bella, why do you think that? Let's hear it. Let's talk about it. Alright, so we are bouncing off of my levels here. Alright, so look at this level. See if this level holds it. Look at that. I tend to want to short this too, but I'll try to short it. feel like if I took some size, I could probably make some good money attacking the levels that I draw on these charts. I can hold the rest break even now. We push up, I'm gonna get out break even, but I wanna let it ride down some more and get out green. I don't want to be break even. I want to be profitable. We already got a nice little breakdown too, so I was right about the direction short term, but yeah, now I'm gonna have to cut it. It looks like that's not fun. That hurts a little bit. I'm still great on the day, but I wanted to get out early and I should have, but this level just holding really strong. Very choppy market though. It's hard to predict direction here. Yeah, I mean, we don't have yeah, I mean, like, look, you got people that just kind of say stuff. This is what you realize. They say, oh, we're in a recession, or oh, like, but some of them don't know what the technical definition of a recession is, which is 2 consecutive losing GDP quarters, which we're not in yet. You know, we're just not in that right now. Now, maybe we're at the start of one, but it doesn't mean we're actually in one. You need confirmation. You need 2 consecutive losing GDP quarters, and we're just not there yet. It's not where we're at. Now, maybe we're leading towards one. We're heading towards one. We got all this different stuff, but we're just not there yet, right? And I think people want to exclaim how bad things are, and so they're like, yeah, recession. And it's like, not really, not necessarily. We're not there yet. Maybe we're heading that way. And again, we'll have to see what GDP shows up as next week. GDP comes out on Wednesday with a lot of other economic reports. Next week's packed. It's crazy, honestly. But that's what we got to wait to see what quarter one GDP looks like for the first quarter of 2025. I'm curious. Again, most people here agree with me, or at least have the same sentiment as me, which is that we're going to be low positives, like decimal positives. We're going to be like 0.6% GDP or something like that, which is not good either. But we're not necessarily in a recession. Stagflation? Yeah, I mean, you could argue stagflation. Tesla's still down. All right, guys. So now let's see if this top level holds. That's really what I want to see, is this top level holds. I don't know if it's going to, but Tesla earnings gonna be bad. Yeah, I mean, they're at this point, proper technical terms don't matter. The middle and lower class are feeling pain. It's only gonna get worse before anything improves. Yeah, but recession's a very specific thing, though, brother. You know, so like we could call it whatever we want to call it. But an example of this is like people feel pain when inflation's high because they can't afford things, right? But that's actually the opposite of a recession. And so technical terms are necessary. People might be feeling bad. That's true, right? But people felt bad in 2022. And they didn't feel bad because we were in necessarily a recession, but they felt bad because prices were so obscenely high that they were unhappy about it. And so, you got to understand, it's a very specific thing. People can feel unhappy if there's too much on either side, right? Like if the economy's too strong, if the labor market's too strong and prices go up too quickly, prices are now unaffordable for a lot of people. They've gone up 2, 3, 4x what they were, and they're now unaffordable. On the other side of that, if the economy is too weak, if the labor market is too weak, if unemployment is too high, if GDP is too negative, people have a hard time working and spending. And so in that regard, people are going to be unhappy as well. And that more lends towards a recession versus the other side of it. But they could be unhappy on both sides. And I would argue they kind of are right now. But again, a recession is a very specific thing. Anyways, NASDAQ moving back up a little bit. Let's see if we get some rebounds in markets here. I think I'm going to reduce this to here. If we have to wait 2 months of negative GDP to confirm we're in a recession, we'll have to be in a recession before we know it. Correct, yes. But we have to have at least one negative GDP report before we can even say we're entering a recession, which we don't have yet, right? And so we should have at least one that's negative that we can look at and say, okay, this is negative. Let's see if the next one's negative. If GDP comes out next week and it's not negative, we are not in a recession, And so you got to understand, that's what it is. And so it's 2 consecutive GDP negative quarters back to back consecutively. And so if we don't have that, we're not in one. And if we don't have one, we're not in one, rate cut actually, the odds of rate cut actually went up. So the odds of rate cuts are now for June. June, it's 60% chance likely they're going to cut rates by June. Previously, it was July. And so we got some odds of rate cuts going up. We're still not looking like we're going to cut rates next month. I think next month we got like a 12 or 13% chance of a rate cut in May. And so we still have time. Right, exactly, 7.5. And I think people really want to, like I said, they want to exclaim things. They want to say, oh, they want to talk about how bad things are. And this is pretty standard. Like election year, we saw this a lot. Election year, we saw, oh, we're in a recession. We're in a recession. And I'm like, no, we're not. GDP's 2.5%. What are you talking about? We're not in a recession, of course. But again, people just want to exclaim things. That's what you realize in finance. Like whoever likes the current admin, they're going to act like we're not in one. And whoever dislikes the current admin, they're going to act like we're in the worst thing we could ever be. And this is pretty standard, right? Both of those things are usually not true, and you got to take it with a grain of salt and understand the context of everything, where both of those things are usually not true. People are just really politically biased is what it is. Anyways. All right, so now we're rebounding back up. We're testing that 200 exponential on a 1-minute chart. And so we'll see if we move here. But everybody does want to be the next Michael Burry. Funny enough. Hey, thank you. What's up, Faye? We are not in a recession because they changed the definition of a recession. See, I hear this one too, right? No, that's not true at all. We're not in a recession because in order to have a recession, you need 2 consecutive losing GDP quarters. You talking about stuff that happened 3 years ago is completely insignificant, right? Completely insignificant. Like, yes, we did have, maybe you could call it a little mini recession 3 years ago. But following that, we got like 2.3, 2.7, 2.8% GDP. It was nowhere near a recession. And again, that's just kind of political bias. At this point in time, right, for the last few years, we've had 2+ GDP pretty consistently. And so we're nowhere near that over the past few years. But again, people are politically biased. They want to act like it's the worst it could ever be. Cough, cough, please elect our guy. Cough, cough, cough is what they do. And this is pretty standard. You saw this a lot last year because it was an election year. You see it a lot now on the other side, and so just, again, be objective. We're not in a recession right now. We might be heading towards one for sure. We could be heading towards one if we get negative GDP next week on Wednesday. Then you might be able to validly say that we could be starting one. But again, until we get at least one negative quarter, we're not in one. All right, anyways, we're still rejecting the 200 exponential. Yeah, I mean, I don't look at it in terms of like politicians, to be honest. Personally, I don't look at it towards anybody's economy or anybody's anything. I don't look at it like that at all. I look at it as what has happened in terms of economic policy and markets and everything in the economy over the past 6 years, 5 years. And what happened, what has happened over the last 5 years is this. We had a really good real estate market starting in 2019. We had low interest rates. People were used to really low rates in real estate. Real estate market was doing pretty well, flying to a point in which a lot of people thought it was too high in real estate. 2020 happened. Lockdowns happened. Craziness happened. Federal Reserve stepped in, did a lot of economic stimulus, including quantitative easing. They printed a bunch of money, injected liquidity into the bond markets, supply and demand, trying to bring interest rates down. They just straight up cut rates to almost zero. And they kept them there for a while. And then they also sent out stimulus checks. And then supply chains were already shut down too. And all of these things, QE, rate cuts, stimulus checks, supply chain problems, all of those things contributed to massive inflationary pressure following 2020. And so within a few years, inflation was 7, 8, 9%. Fed panics and says, oh no, inflation's almost 10%. They start to be restrictive, trying to push that economy down a little bit to bring inflation back down to a reasonable growth pattern. And so we got a hawkish Fed for a few years after 2020, where they're trying to literally push the economy down, raising interest rates, doing QT. They're trying to push the economy down, trying to control it from massive inflation problems. And those inflation problems that we got following all that economic stimulus of 2020 is why a lot of people are still unhappy to this day, and why a lot of people are still saying, oh, we're in a recession, because people are so unhappy. They think, oh, we must be in a recession. Not really. We've just had prices 2 or 3, 4x over the past 5 years because of all the stuff that happened. And that's causing a lot of problems everywhere still to this day, even with inflation after the Fed's hawkish restrictive stance. Inflation has slowed. It's only 3.2%, 2.5%, 2.8%. Inflation has slowed down, but it doesn't really go down, it slows down. And so we're still dealing with those higher prices over the past few years. And then now we have basically, supply chains have gotten better. That has kind of helped inflation slow, as well as the restrictive Federal Reserve policy. And now we got the tariff stuff going on, kind of impacting the economy in a period of time in which the Fed has still been pretty hawkish from that inflation. The Fed's still pretty hawkish. They're not the most dovish they could be. If they were, they'd be cutting rates right now and lowering interest rates down, but they're fearing inflation. And so instead, they're pausing rates at what a lot of people are going to call a high level, but it's not actually super high relative to average in terms of interest rates. And so that's the market we're currently in right now. And that's kind of what's happened over the past 5 or 6 years, where the Federal Reserve has done all this different stuff to kind of influence things. And yeah, but again, GDP for most of this time has been positive. So what does that mean? It means like the problems have been inflationary more so than weakness in the economy and markets. And so that's where a lot of people get it wrong, which is like they're looking at people unhappy because mostly of inflation, and they're blaming it on a recession, which is actually the opposite. Yeah, gold's flying up too. And gold honestly is one of the best inflation hedges and I've said this 1,000 times, but gold is obviously one of the best inflation hedges. I'm not choosing to buy it at these high levels personally, but I don't blame you if you do. I'm not mad at you if you do. I understand it. And I honestly was wrong because I should have bought it at 2,500, 3K or so. But again, the likelihood that we're going to downtrend for a strong period of time is high. And I don't want to get stuck in that. But again, I could just miss out on the boat. That's kind of what happens if you wait too long. Yeah, I mean, but we always have into it. You know, I hear people talking about deficits. I hear people talking about debt, like government debt and stuff like that. What you got to understand is that inflation in some ways is good for that. Because, you know, say you've got 15 trillion in debt. Let's just call it, let's see, billion, trillion, 15 trillion in debt. All right. And let's say every year, let's just give a crazy number. Let's say we got 10% inflation every year. Right? And then for 40 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40. It's going to decrease. Not literally, but the buying power of it's going to decrease. It's going to feel like this, you know, in 40 years at 10% inflation. Now, 10% inflation is kind of crazy, but the point remains. Inflation, to a certain extent, for debt is kind of good. It's one of the reasons real estate investors make so much money is because they, like, you got to think about real estate. People look at real estate wrong. They look at real estate like, oh, it's a problem. It's a hassle. What if prices go down? Like, whatever it is. What they're missing out on is this point, which is that, number one, if you get a mortgage, say your mortgage is $3,000 a month, right? And inflation grows at what, 3% a year on average? Let's call it 2.5%. Right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. In 20 years, it's going to be about half as significant to you in buying power. As long as your income rises as inflation rises, it's going to be about half as significant. It's not going to be the end of the world, right? Not only do you have this aspect of it, and this is what real estate investors do, which is that property values are going to rise 2, 3, 4, 5% a year. And so you can get a mortgage for $300K. If that home is worth $500K in 10 years, your mortgage is a lot less significant of that overall value of the home, and you can get loans or do whatever you want on that. Not only that, but if it's a rental property, over time you can raise the rent to keep up with inflation as well. And so you're growing your net worth in a lot of different ways by owning real estate, a lot of different ways. Most of them are going to appreciate over time. Rent's going to be able to go up with that appreciation. If you get a mortgage, that's going to be less significant over time and so forth and so on. But it's a lot of work, though. It's a lot of hassle. All right, so market's coming back down. We rejected right there at the 200 EMA. Hopefully for all my US people, you had a good holiday. All right, so Japan's Prime Minister Ishiba says that they won't keep conceding in U.S. tariff talks, according to Bloomberg. They say, quote, if Japan concedes everything, we won't be able to secure our natural interest. So, yeah, it's looking less likely that we're going to get a Japan deal, is what everybody's saying. It says Japan's Prime Minister Ishiba isn't backing down. It's clear that negotiations with Japan for tariff stuff won't be easy. If Japan won't concede, this deal could take a lot longer than expected, and national interests are on the line. Oh man, the internet. Are you guys bullish or bearish today? What do you guys think? Fed's Goolsby still believes rates will be lower in 12 to 18 months. Yeah, gold's been breaking all-time highs. So is Goolsby speaking right now? Let me check. Hold on. Bear with me, chat. Pun intended, I think. All right, so White House says that U.S. President stands behind Secretary of Defense. Gilead positive top-line results from Phase 3 trial. Yeah, so Fed's Goolsby says that we have got short-run inflation expectations up, but long-run expectations are not rising, and that is very important according to CNBC. Citigroup expects Fed to deliver next interest rate cut in June now. And so we talked about that earlier. Hawaii plans mass shipments of 910C chips to China. Tesla delays affordable car production, and Netflix beats expectations. Is some stuff that's happened. We're still waiting here. We still got 35 minutes or so until the market opens. 35 minutes or so. Yeah, I mean, it's the day after a holiday, and a lot of other countries are actually still closed today in terms of news reports and stuff like that. So, yeah. Again, we're going to get some trading done here. I think if we pop up, we might short stuff. I need a little bit larger of a pop, though, before. I got to watch NVIDIA Apple here. I'm waiting to get closer to the open. I know I tend to do better after the bell. Like, after the opening bell. So I got to just kind of chill and wait for that type of stuff. Alright, I was going to short. Let's see if I regret by not shorting. Alright. All right, so we're so flat right now. We're so consolidating here. Here, I'm gonna move this real quick, and then no, I was laughing at other stuff, dude. Honestly, I was laughing at some other stuff that I saw here. So it wasn't necessarily you guys. It was just some funny stuff that I saw, to be honest. Sacking workers. Yeah, honestly, though, like, layoffs have been slightly bullish. Slightly bullish. So layoffs haven't actually been, like, horrible things. Layoffs haven't actually been terrible reactions because of, like, layoffs can sometimes mean better margins for companies, better margins for companies. And so with those better margins, sometimes companies, you know, sometimes companies in stock price will react positively to those layoffs because of better margins. So I hope that makes sense. Hold on one second. All right, we're back. Better margins in market fearing inflation. Larger countries laying off leads to less money. Yeah, inflation fears. Like, well, there was a period of time where we saw, like, every company would announce layoffs and react really positively to it. So there was a period of time where layoffs would positively impact companies because of inflation fears and, like, a lot of other stuff too. Consumer confidence. Yeah, so, and then Friday, I think we have University of Michigan consumer sentiment data. Let me see. And that actually might move stuff too. Yeah, so we got, on April 25th, we got consumer sentiment and inflation data. So look at this 815 level that we've been drawing on the chart. See, we keep hitting this 815 level, this 115 level, but nothing ends up happening. Yeah, we printed a lot. Is it better to have a stronger weak dollar right now? I mean, honestly, it's more nuanced than that. All right, look at this drop. Tesla testing lows of the day here. So Tesla's right at 231s, 230s, right around the lows of the day for Tesla. It's looking weaker here. I think this is kind of dragging the market down. I wanted to short. Like, I wanted to short, but I guess I'm going to wait. All right, so Discover merger approval is good news for Capital One and good news for other bank stocks. So maybe banks are going to react positively. Look at this weakness, though, showing up in NASDAQ here. Yeah, I mean, but no matter what the dollar does, people are going to freak out. The Dixie, honestly, okay, if the Dixie's rising, people are saying, oh no, inflation's a problem, it's the end of the world. If the Dixie's going down, they're going to say, oh no, the dollar's crashing, it's the end of the world. A high dollar indicates inflation problems. A low dollar indicates economic weakness. And lately we've seen a low dollar over everything else. Like the Dixie is down at 2-3-year lows. Dollar index is at 98.13s here, so it's looking weaker for sure. But yeah, so Capital One and Discover's merger is a $35 billion merger. What's Capital One? COF is Capital One. And Capital One's up overnight. It's at 170s. Look at this negative pressure showing up in the market, guys. Negative pressure showing up, looking weak. Wow. All right, so let's see if we hold. Hey, hey. All right, guys. So yeah, Nasdaq's coming down a little bit, testing lows here. Tesla's down. Tesla's testing lows. Yeah, market opened up red today, Carol. Yeah. Tesla just broke lows of the day, down to 230.60s. Look at the Nasdaq coming down too. All right, so we got a little pop-up. Yeah, that's not why the market's down, Abel. Not in my opinion, but who knows? You never know. There's always correlations, but I don't think that's the reason the market's down. Yeah, and again, the problem with the dollar is this, though. I've said this once, I'll say it again. No matter which way people sensationalize things, this is why everybody predicting a crash all the time has mostly been wrong, except for this time, right? But this is what you got to understand. This is the dollar long term. It looks to be a pretty continuation pattern here. Stair-step continuation pattern, in my opinion, right? But what do I know? I'm not an investment professional. I'm not liable if you lose. I have no idea what I'm talking about. I might be wildly wrong about anything and everything I say. But here's the dollar over time. Stair-step pattern. Now, listen, if we break underneath $90, I don't think that's good, right? If we break under 90, bad, right? Big historical support and resistance over the last 20 years. We break under 90 on the Dixie, that's bad. But under 100 is not really the end of the world. Like, it's stair-step pattern still there. Look at the market falling. All right, so the Nasdaq's tumbling. All right, guys. Whew. Are we going to test this low is what I want to know. I tend to think we will. If we can bounce up, I'll short it. I'm a little bit late in my short, I think, but there we go. There's a little pop. I will short this. We'll add to it too if we get a good, like if we can go up a little bit more, we'll add to it. Okay, that's better. We'll add to that now. We got 2 contracts here. Oh, don't do it to me. There we go. All right, we took half off, locked it in. We got one little baby contract left. We might choose to add to this one too if it goes up some more, but we're so close to lows. I tend to think we're at least going to test these lows. We might bounce after we test them. I don't know though, not an investment professional, don't copy me. But at the very least, we got a little cushion that we can use on this position and add to it and then hold it break even maybe. We're very close to lows. There we go. Yeah, I gotta cut it now. So we ended up green on that trade. We actually made money on it, but this retracement, I didn't like it. I'll add back at a like if we get a nice little bounce back. All right, so we'll short here. We'll add a little bit up here at this level if we get up there, 110s, 108s. We need to get up there though. Or 106s. I don't know if I want to add yet. I'm gonna wait. All right, guys, we got 17 minutes into the opening bell, too. 17 minutes. Oh, yeah, I'm big papa paper hands is what I am. I'm big paper hands. But I don't care. Like, you should fear the market, you know? Now, I will cut this position if we get close to the opening bell. I don't feel like holding through any opening volatility. I was wondering if we would move back down and test these lows, but we could also just be stagnating here. And luckily, we had a green trade, and we're green on the day. So we got a little cushion that we can play with, but I want a breakdown that I can add to here is what I want, but I'm just not getting it. All right, we'll hold to the top of this candlestick. We break the top of this candle, we're cutting it. Okay, that's better. There we go. I'm watching the price action, but I don't like this retracement at all. That's better. I'll add to it now. We got 2 contracts. We'll hold the rest pretty close to break even. All right, we got out half of it there. Just kind of grinding the rest up some. We'll hold the rest break even. All right, so we got to cut it. So we got out the rest flat. Completely flat. We actually made 50 cents on that last little piece. It might keep breaking down, but again, it's early in pre-market and we're heading towards the opening bell. I'm just not trying to get stuck in any dumb stuff. And there's a big bounce back, so it looks like we cut it at the right time. Also, guys, make sure you give me a follow on X.com. Honestly, we've been growing our X.com page like crazy. We got the top 4 reasons the market's down today. And so again, if you want to check out that post, it breaks down the top 4 reasons the market is down today, and we kind of break everything down on our x.com page. So you're missing out on some like good news updates. If you want to stay up to date about what's going on, it's completely free, doesn't cost a penny. Check it out. There's the link right there. It's also at Beginner Trades, TRADES trades. And so check it out. There's the link. Great way to help support your boy here on this channel. All free as always, like we always do here. All free. Yeah. All right, guys, so we're testing this 18 level again. Very stagnating price action. We're at the very bottom of the range here. The only thing, though, is like if we crack this low at 18s, like look at this low down here at 18,000. I think that's a bad level. Like if we take a look at a longer term chart, some levels that I'm specifically watching right now. I'm watching obviously 18, 17, but look at 18 is right here. 17.5 is one as well. So, I mean, we're trending towards the bottom of these lows from the market. And so we just got to be really, really, really careful. The market's really, really careful. Yeah, I don't know if we're bullish or bearish today, dude. I really don't know. And again, if you want to check out Top Step, you can see the link pinned to the top of the page. Great way to help support your boy here in this channel. Again, Top Step gives you a 50K demo. They test your skill with it. If you pass the test, they fund you. As long as you follow their rules, they pass it, they fund you. If you fail, you only lose what you pay for it. The base one is $49 a month. It's a great way to learn. Like, most day traders lose their first few years, and they lose their first couple accounts at least. Usually, I did at least. This is pretty common. And it's called market tuition, losing in the beginning. And so instead of funding thousands of dollars into your own account, paying your market tuition, doesn't it make much more sense to try something like this where they give you a 50K demo? If you pass that test, you got to make 3K in profit without losing 2K on their base one. If you do that, they fund you 50K, you get a 90% split. You get to keep your first 10K in profit, and it teaches you how to trade in a structured environment. And the split is very similar to funding yourself. But if you fail, instead of losing your entire $10,000 account, $5,000 account, whatever you try to use, you lose 49 bucks. Right? It's the best of both worlds, and they've paid out hundreds of millions. It's just a great way to learn. If you want to check it out, link is at the top of the page. The futures market is very similar to day trading stocks too. But understand all this stuff on screen. As I always say, I don't even claim to be a good trader. My job is just to help new traders. And, you know, I try to just be honest with people. Don't even claim to be a good trader. Not an investment professional, obviously. Not liable if you lose money. Understand all this stuff on screen, CFTC 4.41. Sometimes I trade off stream. You're not going to see it. I just try to be real with people about it. I hope you guys understand. But yeah, if you want to check it out, link is at the top of the chat, pinned to the top of the page. Yeah, it's definitely a weird market here, guys. Like, look, so essentially what has happened, we put a weekly chart up. It's probably the easiest way. Here's weekly charts on the NASDAQ, top right. What has essentially happened here? Oh, if you use Top Step X, zero commission as well. So when you sign up, I would use Top Step X personally. Zero commission, just a great platform. But with that said, though, we basically hit 22,450. As of now, relative to all-time highs, the NASDAQ is currently, as of now, relative to all-time highs, the NASDAQ is currently 22,450 down to where we're at now. We're at 18s. So as of now, the NASDAQ is technically down 20%. As of now, 20% decrease in the NASDAQ. I think the S&P is a little bit less than that, but still down pretty significantly. And we're trending towards the lows. We break under the 16.5 level. That's big red. And then we're still around lows to start the day here. So we're opening up very close to lows of the day for the NASDAQ here. We'll make this a little bit larger. We're opening up very close to lows. And we got 9 minutes left until the opening bell, guys. 9 minutes. Nice pawn. Timer for what? We don't really have any economic reports today. It's pretty boring, in all honesty. Like, we don't really have any economic reports today. Like, Wednesday we got some, Thursday we got some, Friday we got some, but today, tomorrow, kind of boring. All right, tomorrow we got Tesla earnings. Thursday we got Google earnings. So we got stuff going on, don't get me wrong. But this week, next week's crazy busy. Do we have any earnings next week as well? That's what I want to see. So let's check it out. Monday, April 28th. Nothing big. We got SoFi Tuesday. We got Snapchat Tuesday evening. Wednesday. Yeah. Next week is crazy. Guys, crazy. Next week we got Meta, Microsoft, Snapchat, Robinhood. I'm scared to even look at Thursday. We're going to be so busy next week. Roblox, Eli Lilly, Apple, Amazon. Next week's one of the crazier weeks in finance, to be honest, chat. Next week, one of the crazier weeks in finance. Next week, just to put this into perspective, let's talk about it, okay? Next week, the week starting, what does next week start? Hold on, let me see. The week of the 28th of April, next week, we have, I'm going to go through economic reports first. We've got the JOLTS job report, CB consumer confidence data, the Case-Shiller house price index, ADP non-farm employment change on Wednesday, GDP on Wednesday, PCE on Wednesday. Thursday, we got jobless claims, ISM manufacturing, PMI data, construction spending. Friday, we got non-farm payrolls, unemployment. We have SoFi earnings, Visa earnings. We've got Amazon earnings, Apple earnings, Snapchat earnings, Microsoft earnings, Meta earnings, all next week. So next week is a very influential week in finance. We got JOLTS, we got non-farm payrolls, unemployment, we got all kind of stuff. PCE data, GDP data in a period where everybody, or not everybody, in a period where a lot of people are calling us in a recession, which we're not, but they're still saying it. And so GDP is relevant in that regard. So we'll see what happens. And yeah, it should be fun. At the same time, right, heading into the opening bell today, we got 5 minutes until the opening bell. We are really close to lows of the day here. Really close to lows of the day. Nvidia is pretty close to lows of the day. NASDAQ has been on a downward swing here. Tesla has been breaking lows. Bond yields are higher this morning, not lower. Bond yields are higher. Yeah, it's been definitely a little sketchy in stocks and finance, guys. Definitely a little sketchy in stocks. We got 5 minutes left. 5 minutes. All right, we're creeping up a little bit here. I'm wondering when the second part of the semi-annual monetary policy report is. Let me look at the FOMC calendar. Kugler, Waller. Yes, we got the semi-annual monetary policy report. We got Jackson Hole Symposium sometime. Last one was February. All right, guys. Hey, we got 4 minutes. 4 minutes. Be ready. Be ready. Yeah, gold's up a lot. GDP, PCE, non-farm employment, payrolls, unemployment data, jobless claims, JOLTS, job openings. Again, Apple, SoFi, Microsoft, Meta, Amazon earnings next week. This week we got Google and Tesla earnings, though, so we got some stuff going on this week, too. Yeah, Jackson Hole's later on. I'm trying to see when Powell speaks. He's already talked a couple different times. All right, so we got this big level at 115 that I'm watching at the opening bell. We're really close to the open. We're green but small. We got a little baby cushion so far on the day. Nothing too crazy here. I kind of want to short because we're hitting that 115 level here, but I also don't necessarily trust anything right now. All right, guys. All right, so we didn't just creep up. We broke 18,115s. 18,115s. Nasdaq's ripping up. Maybe I should have shorted. Nvidia's bouncing up. Tesla just cracked lows right before the opening bell. We got 1 minute left until the opening bell, chat. 1 minute left. Y'all be careful. Yeah, Bitcoin's been flying back up. If we take a look at BTC here, Bitcoin's at 87,000 this morning, 87K. All right, look at this rise. Let's see if there's any reason for this. Chevron starts oil production. It's been pretty slow news-wise, to be honest. Today. Kind of boring. All right, guys, 30 seconds here. 30 seconds until the market opens. $87,410s. Look at the NASDAQ. All right, guys. NASDAQ's ripping up at the opening bell. There's the open. Nvidia bouncing up. Tesla dropping down here. NASDAQ starting to rise up to 18,150s here, chat. 18,150s. Look, we just tapped it. The opening bell is here. Nvidia's trying to get back over $100. Look at this level here. You love to see it. Make it, yeah. All right, guys, markets are up at the opening bell here. And now Tesla's dragging the market back down. Nvidia's dragging the market back up is what it seems like to me. All right. We got some stuff falling down here this morning. Again, Microsoft earnings, Tesla earnings tomorrow. think maybe some people are selling Tesla ahead of their earnings. Where's Netflix? Netflix is up. Netflix is rising. We're going to wait a couple minutes and let things play out first. Look at this 150 level hold, though, man. My level worked. Doesn't mean it's going to hold here, though. It could keep bouncing back. You never freaking know. But the fact that it makes a pit stop at my level gives me some confidence in the levels that I draw. Could buy this dip, too, right here. It's too close to the open, I think, though. I got to wait. Tesla earnings are tomorrow evening. Netflix is still rising here, chat. Netflix is still rising. All right, so there we go. We finally broke that level here. We're gonna have to draw some new levels now, maybe. But honestly, I don't necessarily hate this. I think we have 175. I think 175 makes sense. We'll cover that too. Nvidia still falling. Nvidia started to reverse back up though. Tesla did too. Tesla started to creep back up. AMD testing bottoms though. Microsoft doing a little bit better. Coming back. Nice. All right, we're heading back up. Look at 18175s now. 18175s. Still struggling to get over this 18150 level though. All right. We're over the 200 exponential though, but honestly, we're kind of flat since the bell here. We're not really moving a lot, to be honest. Like, we're kind of boring. Like, look at Nvidia, which is probably the biggest market mover here. I would say Nvidia, maybe Apple. Both of them are kind of sideways, although Apple's looking stronger. All right, we're 4 minutes into the opening bell, basically. About 4 minutes right at 5 seconds. Apple's starting to creep up. Google's falling down a little bit. Meta's up some. AMD's trying here. Netflix has rose a lot right before the open and after the open. But Nvidia's flat, stagnating. Tesla's still falling down, looking kind of weak here. I'm not really confident in either direction right now. What do you guys think? Tesla kind of coming back up though. This looks better. I don't know if it'll hold, but Tesla's trying. Apple's trying too, to be honest. But Netflix turning back down some now. Of course, I've traded Bitcoin before. Do I do it regularly? No, not really. All right, so there's a big turnaround here, a big red. Look at Nvidia turn down here. Nvidia's right at the bottom of the range. I see Tesla start to come back down a little bit here as well. Yep, there's some pressure. See if we bounce back up, we could short it. Needs to be a larger bounce though. Didn't quite catch it. I might be a little overzealous here. Try to jump in small. Take 2, maybe 3. There we go. Take half off. Get out the rest at the bottom. Just made about $40 there. We'll take that. Green is good. Market's starting to turn a little bit on the downside. Still looking weak. Testing lows of the, yeah, getting close to the lows of the day. I'm very short biased here. I'm going to jump in. It's kind of risky here, though, to be honest, but it's good enough. We're so close to these lows. There we go. There we go. There we go. All right, so we just made about $40 there. We are up about 100 on the day. I will take that. Green is good. Got a little cushion here. Got so close to these lows. That's kind of like a magnet, I would say. Alright, look, so we crack lows and then completely retrace. Maybe a little liquidity grab. Look at Tesla start to fight back up here at 230s now. Look at this retracement here in markets. Wow. Kind of crazy. It's a big retracement after breaking lows of the day. Palantir up a lot today too. Up to almost $100. But look, we cracked these lows, came all the way back up here now. Now I'm not really interested in shorting. It's too strong. Look, we hit that 115 level again though. Look at that. Again, my hands are kind of off right now. This is too weird of price action here. Kind of choppy. How you guys doing today? Y'all red or green right now? Again, if you haven't already checked out TopStep, we're trading on a 50K funded account on TopStep. TopStep gives you a 50K demo. They test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. And again, it's just a great way to learn. Most day traders lose. Having the structured environment, instead of funding your own account thousands and losing that, having a structured environment where you got to follow rules, you got to hit certain targets, you got to follow certain things, and then actually getting funded with a 90% split, which is similar to funding your own account, is just a good situation for new traders most of the time to learn. I lost 3-4 grand when I first got started within a couple weeks funding my own account, and that just doesn't make sense for new traders. Almost all new traders are going to have to pay their market tuition by losing, because almost all new traders lose. The only people that act like you don't are people who are trying to sell you a course or service or whatever. Most day traders lose, right? It's a lot cheaper to lose here and learn this way, and if you're good enough to pass it, you still get a 90% split once you're funded. You still get to keep your first 10K in profit, versus failing and losing $50 is not the end of the world. It's just the best of both worlds. They pay out hundreds of millions. They fund thousands of traders. It's just a great way to learn how to trade. If you want to check it out, link is in the description. You can see the link pinned at the top of the page as well. They are an affiliate of mine. I get paid by them, so I'm biased, of course. Understand all this stuff on screen. I can't guarantee anything. Not an investment professional. Not liable if you lose. Understand all this stuff. But honestly, we're following my levels pretty freaking closely here. Look at this 115 spot. I hate this song. You can go to the settings, Robert. There's those settings that you can do. Tesla earnings tomorrow. Google earnings on Thursday. Yeah, I'm looking at other news here to see if we... All right, so again, we're still struggling to get over 115, 120 on the NQ. Apple and other stuff kind of looking red. Oh, I got in late here. I got in really late. I don't like this move at all. Ugh. I'm gonna have to cut this and get out small here. I just got in late. Don't really like the fill. It retraced too fast. All right, I'll short this now. Take a couple contracts here. Or maybe add if we retrace a little bit more. I love a breakdown, but struggling to kind of get up there. I want to break down. I want it to drop and then add to it, but it seemed to really struggle holding down here too. Here's a little bit of one. Try to hold the rest break even. Here we go. It's so close to these lows. Oh, no, don't retrace on me after I add to it. There we go. All right, I'm going to take half off. Just lock that profit in, dude. I need to. It's too stressful here. Keep dropping, though. Come on. This is taking too long. I'm going to get out flat. So we're basically flat in the last two positions. I could have held, though. It's all right. We got to take it quick. You know, I'm too worried it's going to retrace back up and hit 115s and retest it. I just don't want to hold through that. We got the support level down here, which means it might bounce even more. And that's kind of what it's doing. And there's the retracement. So maybe we can add on this little retracement back up. But it depends on what everything else looks like, to be honest here. Alright, we're going to add right back. There we go. Hold the rest break even. Add a little bit more maybe. Take half off. What are we going to do on the rest? We're so close to lows. Hold this. Break even now, if we can. Alright, we got to get out break even. Made about $20 on that one too. We're up about 115 bucks. Total on the day, we're up about 125. All right, so there's the breakdown. I should have held it longer, but it's all right. Could have held it maybe a little longer. I haven't even looked at Starbucks stock though. But it's been struggling as of late too. I think the sentiment around it is changing some as well, but I mean, we've done pretty good today on our trades, in all honesty. Like, we've done pretty good. Bitcoin. Where's Bitcoin at? Bitcoin's still at, almost 88,000. Bitcoin's starting to surge up too. All right, so here's the lows of the day, guys. Here's the lows of the day. We're right here. We're right at lows of the day. Will we break lows of the day again, guys? Nvidia's edging towards the lows of the day as well. Nvidia's getting close. 97.47 is the lows of the day for Nvidia. It's at 97.60. Nasdaq's breaking down. It's at 18.64. The low of the day on the Nasdaq is about 18.60. All right, Nvidia just broke lows of the day. Nasdaq just broke downs under the lows of the day here, chat. All right, so the president just said, quote, there can be a slowing of the economy unless Mr. Too Late lowers interest rates now. So the president is getting mad about Powell. President's going in on Powell. The president says preemptive cuts and interest rates are being called for by many, with energy costs way down, food prices, including eggs, substantially lower, and most other things trending down. So the president's pushing for emergency cuts. Or at least maybe a cut on Wednesday. All right, so last Wednesday, Elon held a call with current XAI investors, according to Faber on CNBC, and he said XAI is setting up for another capital raise of significance. So I don't have coffee sludge today. We got some my wife bought some fancier, snooty, organic, mold-free coffee or something like that I'm drinking right now. It honestly tastes better than the sludge, though. The sludge that she was making was community coffee chicory. And it just tasted like sludge. I didn't like it at all. I like this one. That was pretty good. All right, guys. So market's bouncing back here. Market's bouncing back. Nvidia just bounced back. Very volatile market, honestly. Again, the president calling for preemptive cuts. All right, look, we hit that 115 level. Let's see if we hold now, though. All right, so we're still testing that 115 level here. Tesla coming back down at 229s. Nvidia at 98s here. Still coming back down. Still looking kind of sketchy and weak. I wonder if the odds of rate cuts are increasing or decreasing with this current battle here. Right now, they're staying the same. Haven't really moved. They're at 12.4%, as you can see, for rate cuts in May. By May, I should say. By May, what is this, May 7th? So, yeah. Yeah, he said preemptive cuts in interest rates are being called for by many. There's virtually no inflation with these costs trending so nicely downward. Just what I predicted they would do. There can be no inflation, but there can be a slowing of the economy unless Mr. Too Late lowers interest rates now. Europe has already lowered 7 times. Powell has always been too late, except when it came to... yeah. So, basically, he doesn't like Powell. Do you agree? Is the question. All right, here we go. We're testing lows of the day again now. Testing lows of the day again. Do you think Powell will go with the pressure and cut? I mean, we did get cuts already, though, MC. So we have... so just to put this into perspective, guys, we cut 3 times last year. We cut 50 basis points, I believe, in September. 25 basis points. It was either in October or November, and then another 25 basis points in December. So last year we cut by a full percentage point. The last 3 months of last year, basically. All right, so we're breaking down, testing lows. We haven't quite broken them yet. Tesla did break lows, though, at 226s. Nvidia breaking down to 97.40s here, 97.40. So we are looking sketchy in markets breaking down. All right, so we're testing these lows again here, chat. Testing these lows again. Yeah, maybe he'll end QT. Yeah, I want to see what Q1 GDP looks like, to be honest. All right, guys, we just broke lows of the day. Just broke lows of the day. And again, you guys know me. I'm politically neutral. I don't care about any of this stuff in terms of, like, rooting for either specific side. I am worried about a weakening of the economy. But I also am worried about inflation as well, right? So I'm kind of in the middle somewhere between all this stuff. It depends on what Q1 GDP looks like. All right, guys, so we're testing these lows of the day again. Still breaking down. Do we have anything coming out at 10 a.m. today? We got nothing. Okay. Or wait. We got U.S. leading indicator. It's expected at minus 0.5%. Minus 0.5%. Yeah, it's expected at minus 0.5 for the U.S. leading indicator. This is a economic indices are the key elements in analytics. The leading, coincident, and lagging economic indexes are essentially composite averages of several individual leading, coincident, and lagging indicators. All right, so they're expected minus 0.5% for the leading index, dropping in about 4 minutes. 4 minutes. Nasdaq still breaking lows as this is all happening. All right, guys, so we're cracking lows again. Break it down here. 18s. Look at 18,000. I think 18,000 is a really interesting level. Really interesting level. We're starting to creep lower. All right, guys. Oof, y'all be careful, man. Here goes 18,000. We got the leading indicator coming out live in about 3 minutes. 3 minutes. Not really a big one, but we're going to cover it no matter what. Did y'all like that music or no? Yeah, Tesla earnings tomorrow evening. Google earnings later this week, too. Most stuff's down, though. Question is, did we start to bounce back up? Trying to see if we have any like justifiable levels here. I don't really see any. I mean, we got this. I gotta just wait, I think, for me personally. Maybe 25 might be one, like right here. Like this could be one. I'm not saying it is, but this could be one right here. 25. Yeah, there's 25. All right, guys, we got less than 2 minutes. I want to see if we break under 18,000. All right, so we did break under the 18 and 25s. Didn't really hold. I was curious about it. I'm watching 18,000 now. I might buy 18,000. The problem is we got the leading indicator coming out in a minute. So we'll see what that looks like. I gotta buy it once. I'm gonna try to buy it. If we really crack underneath it, I'll sell. I don't care, but. All right, we're out. We made $20 there. That's what I'm saying. We're out. I wanted to buy 18,000 because I thought 18,000 would work, and it did work. Yeah, we're up like 140 bucks, almost 150 on the day in a couple different accounts. My trading, honestly, dude, has gotten so much better. I'll show you guys a couple little breakdowns of my own trading here. Here's the leading index. Hold on, let's see what this looks like. The leading index is expected at minus 0.5%. Minus 0.5%. It releases in 10 seconds. In 10 seconds, and then we'll talk about my trading on Top Step for a second, and then we'll see what happens. All right, leading index coming out right now. Just broke under 18,000. Now we're at 17s. 17s. Waiting on the leading index to show up. Minus 0.7. Minus 0.7. A little bit weaker than expected. Minus 0.7 versus minus 0.5 expected. Minus 0.7 for the leading index again versus minus 0.5 expected here. Honestly, dude, we have had a great freaking month. Probably one of my best green streaks ever of all time. Here's the last 30 days of my trading. It's been very, very fun. Very, very fun. All right, so here's all my stuff for the last 30 days of my trading. It's been really fun. Market's cracking lows here, chat. Breaking down here. We're looking weak, 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 weak. Wow. Will this continue here, man? This is kind of shady, guys. This is sketchy. Will we bounce back? We're under 18,000 today, guys. Under 18K. Here's my stats trading for the last 30 days. We have had 2 losing days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 green days in a row. Is that 12? 12 green days in a row. So, not too bad there. I will take it. All right. Love you. Market is still dumping down, chat. Dumping down here. Wow. Yes, this is mostly short positions. It's 75-25 short long is what it is. So it's mostly shorts. But I mean, of course, the market's been crashing. So of course it's going to be short. All right, we're getting really weak here, chat. Really, really weak. Very weak. Yeah, we're going to be on Top Step TV later on today as well. Again, if you haven't already, check out Top Step. Great way to learn how to day trade. It's pinned to the top of the page. This is on Top Step, 50K funded account. No PDT. We're on futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. And yeah, it's been really fun. Really fun to trade. Again, one of my best streaks of the, and again, we've started to trade different than we used to trade, to be honest. So these are like, this is level trading. You see, I draw these levels out. This is what we play off of. Short-term action off of these levels. It's just been working really well. Really, really well. Yeah, I mean, I got to draw new levels down here, to be honest. Because, like, I'll have to do that later on today. But we got to draw new levels here. But, man, it's looking bleak. Guys, looking bleak. Sketchy. Y'all be careful. And, again, y'all be good. Again, I'm going to get out of here. Yeah. Before I cut out, guys, as I always say, listen. I'm not an investment professional. I'm not liable if you lose money. Always make your own assessment, trade responsibly. Understand the CFTC 4.41. Can't guarantee anything. And honestly, with the market breaking down like it has been, I would just be really, really careful, guys. Really, really careful. 18,000, a really big, important level to me. We'll be back later on today. Y'all be safe. Be good. Trade safe, guys.